John Meuret from Meuret Grain Company is our corn and soybean market analyst this week. The U.S. Department of Agriculture's monthly supply and demand estimates released Thursday showed no changes to American soybean supply or use. The agency did lower U.S. corn ending stocks, thanks in part to a 25 million bushel increase in ethanol use. The notable change overseas came in Argentina, where the USDA reduced soybean production from 57 million metric tons to 55.5. John joined us Tuesday afternoon before the report was released. We began by asking for his analysis of recent movements in corn and soybean prices.
You know, they've been choppy, Jeff. We can't seem to get definition and go one direction or the other. So last Monday we opened up and beans tried to break hard, corn maybe follows through, and it lasted one day. So you came back in Tuesday and felt a little better. So choppy, I guess that's long and short of it.
Well, tell me what's happening down in South America.
You know, the crop is stabilized. Argentina had some flooding problems. Wild estimates were thrown around the last 3 weeks and 4 weeks, and we've since stabilized that. Weather's better, the flooding has ended, timely rains and heat have come back. So I think we've went from fear to back to stabilizing crops, but yet the market doesn't want to shed that risk premium just yet. So
what does John Meuret expect for production?
I don't think we're going to see Argentina dip down much below the 54, 55 million metric tons. That's a small enough bean crop for what's going to be harvested around there, but they've got a lot of growing season yet too. So today that's my number. We'll have to adjust it and see how the crop finishes off. Brazil, Jeff, switching gears on you, is getting bigger every day. So I think it's bigger than 105 for the soybean crop, and that's massive.
As we talk about U.S. exports, what does that mean for the U.S. gain?
Well, it should mean we have smaller exports once they start harvesting. Brazil's harvesting, as you know. They've got a nice boat lineup. They'll continue to do that. We're going to continue to see them take more and more of our export market away from us. And so they'll take that until it's time for their corn harvest to come off, and then we'll take some of the tail end back off. But if China's buying South America, we're going to have opportunities to fill in elsewhere. So we're going to still export soybeans. We need to. I mean, our export number is 2 billion. So to get close to that, we have to maintain an active pace the whole marketing year.
Describe the production first for ethanol and then its profitability.
Well, production's been fabulous. In fact, we're breaking records nearly every week in production. Profitability has stayed really strong. A week ago or 10 days ago, it took a little dip. December was record-breaking both in production and in profit in a lot of cases, and January looks to be smaller, which is very seasonal, but it's rebounded. You know, we see it come back to life yesterday, and today it's even a little better. So, you know, oil and gas have stayed flat, but ethanol's been really good.
If you look at corn and soybean basis, it varies a lot across Nebraska. Tell me what it is like up in that area.
It has stayed really weak, Jeff. I mean, we can't seem to get life underneath that thing, and part of it is the supply that we had. You know, we had record crops, and you can drive around and you can see the piles. The second part is limited export demand today. So we've had a horrible winter between Nebraska, Montana, North Dakota, all the way to the West Coast. And so the PNW, Pacific Northwest, is incredibly snarled up. And so the railroad has done a good job trying to dig out, but they're still paying for some of the sins of a big winter. They had an avalanche yesterday in Montana, and that higher car cost is keeping basis levels somewhat suppressed. So
how much corn or soybeans have moved here in 2016?
You know, I think that's the second thing, and that's the same basis conversation, is that the farmers moved a lot of grain. And the stuff that was in the elevator in the commercial hands at harvest through the end of the year is now owned by the elevator. So the farmer has done some moving. He's got a lot more to move, but what has moved is transfer ownership. So
when we get that USDA report at the end of March talking about planted acres, what are your expectations?
You know, we're going to see an overall bigger pie. So we know that corn and bean acreage are going to steal some from wheat that wasn't planted last fall. We know that the bean acres are going to be bigger. 3 or 4 million acres is my guess nationwide. And the corn's probably not going to drop as much as most people think. So we were 94 a year ago. We're probably still going to have something with a 9 in front of it for corn. So if we pick up 4 million bean acres and we don't quite lose 4 on the corn, that makes a lot of sense to me. So
whether or not the USDA makes tweaks in its report on Thursday, we're talking on Tuesday. In the future, where do you think that adjustments could come when we talk about demand?
Now that we've got production set from last year, Jeff, I think the only place they can tweak is demand. And domestic demand's good. We talked on ethanol. Feed demand's good. In fact, record in some cases. I think export's going to have to be trimmed down. We came in the fall last year and had big sights set on the corn and the beans. And because of the traffic we talked about and the congestion, I think we're going to see the corn and the bean export number both come down a little bit. I think that's the risk to the market, is that we've seen our biggest export numbers, which will build our carryouts to the bottom line.